Picture yourself at the kitchen table on a Sunday night, MyGov open on your laptop, about to hit lodge. There is one section of your return your eyes probably slide straight past, the tax offset section. And if you skip it, you could be leaving hundreds of dollars in your pocket behind and thousands out of your super over time. Today I am going to walk you through exactly how to check 3 offsets that quietly get missed every single year. This is money you are entitled to. Let me show you where to find it. Here is why this matters to you. If you are earning $35,000 and you get the low-income super tax offset paid into your super but never check or maximize the companion offsets in your return, you can miss out on around $11,500 in extra after-tax cash over 10 years, based on current ATO settings. And if you have never looked at this before, that is not a failure on your part. Most people are simply told the ATO fixes everything automatically. It mostly does not. If your income, spouse details, or contributions are not entered correctly, these offsets get underapplied, and you quietly overpay tax year after year. The good news? Checking them takes about 15 minutes in MyGov. But here's the part most people miss, and it starts with the very first offset. Step 1. Log into MyGov, link the ATO service if you have not already, and open your current individual tax return in myTax. Head to the tax offset section, sometimes called the T items. The low-income tax offset, or LITO, is meant to be calculated automatically for you. For the 2024 to 25 year, the most you can get is $700, and that is when your taxable income is $37,500 or less according to the ATO. It then phases out and disappears once your taxable income reaches $66,667. Now here is the honest catch. LITO is only calculated correctly if your taxable income is reported correctly. If you have got multiple jobs, a missing PAYG summary, or forgotten deductions, your taxable income can be wrong, and so is your offset. So this is one worth double-checking yourself, not just trusting. Step 2 is for you if you are an older Australian. The Seniors and Pensioners Tax Offset, or SAPTO, can cut your tax significantly, with offset rates up to 24.29% of tax payable for eligible singles, according to the ATO. From the 1st of July 2025, your entitlement cuts out once your adjusted taxable income exceeds $158,000 for singles, or $316,000 for couples. Here's where it gets easy to trip up. SAPTO depends on you correctly entering your age, your pension status, and your spouse details in myTax. Miss a single box and you could pay over $1,000 more in tax in 1 year. So if you are eligible, take a moment to check those fields are filled in and the offset is actually being applied against your tax before you go any further. Step 3 covers the offset you probably never see because it is not cash in hand. The low-income super tax offset, or LISTO, refunds the 15% contributions tax on your super if you earn $37,000 or less, paying up to $500 a year straight into your super fund, according to the ATO. To check it, go to MyGov, then ATO, then Super, and confirm your income for the year is at or under $37,000. Then log into your main super fund and look through your transaction history for an entry labeled LISTO, or Low Income Super Tax Offset, up to $500. And here's the honest part. This one has a catch that catches a lot of people. If you have got several small super accounts from old jobs, use the Consolidate Super function in MyGov to roll them into one low-fee fund, so future LISTO payments are not quietly eaten by duplicate fees. Because as you are about to see, that $500 is worth far more than it looks. Do not underestimate how that $500 a year stacks up. Let me run it a few ways so you can see yourself in it. If you are 30 and earning $35,000 and you receive the maximum $500 LISTO every year through to age 65 at 4% real growth, that builds around $39,000 in today's dollars by retirement, based on the ATO LISTO cap. If you have got fewer years to run, say you are starting in your 40s, it is smaller but still thousands, and if you protect it well and stay in a low-fee fund, you keep every dollar of it. But if you keep switching jobs and abandoning small super accounts, much of that gets lost to fees and forgotten balances. Consolidating your super is one of the simplest ways to protect it. Step 4 is the offset most couples completely miss, and if you have got a partner, this one is for you. If you contribute to your spouse's super and their income is $37,000 or less, you can receive a tax offset of up to $540, according to the ATO. The offset equals 18% of the lesser of $3,000 or your total spouse contributions. So you hit that maximum $540 when you contribute $3,000 and their income is at or under $37,000. It phases out completely once their income hits $40,000. In myTax, open the spouse details and tax offset section. Enter their income and super details and make sure they have not exceeded their non-concessional cap. Then record your contribution so myTax calculates the offset, and here's where it gets genuinely interesting, because the real value is not the offset itself. Picture a couple where one partner earns $90,000 and the other $30,000. That could easily be you and your partner. If the higher earner contributes $3,000 a year to the low-income spouse's super, you can claim $540 in offset each year according to the ATO. Over 20 years, that is $10,800 in reduced tax plus $60,000 of contributions compounding inside the spouse's super. At 4% real growth, those contributions could grow to roughly $132,000 in today's dollars. That is a retirement boost most couples never build, simply because nobody ever told them this offset existed. Now let me show you the mistakes that quietly kill all of this. Before we recap, let us cover the mistakes that cost people the most. The biggest one is assuming the ATO hands you the maximum automatically. It can only apply LITO, LISTO, and SAPTO correctly if your income and spouse details are accurate, and the spouse contribution offset has to be actively claimed by you. Mistake 2 is leaving spouse details blank, which means SAPTO and the spouse offset never trigger. Mistake 3 is misreporting your income. If you should report $35,000 but you enter $40,000, you lose a big chunk of your LITO because the phase-out starts above $37,500, leaving you hundreds of dollars worse off, according to the ATO. And mistake 4 is opting out of super or leaving balances scattered across high-fee funds, which throws away your LISTO every single year. Avoid these 4, and you have already done more than most. Just to lock in the headline number for you. The most low-income tax offset you can get is $700 for taxable incomes of $37,500 or less in the 2024 to 25 year, according to the ATO, phasing out to zero at $66,667. One honest note, it is non-refundable, meaning it can reduce your tax to zero, but will not create a refund on its own. Still, that is 700 good reasons to check the section before you lodge. So here is your rapid recap before you lodge. 1. Open myTax and check your LITOs applied against your correct taxable income. 2. If you are 65 or over, confirm your SAPTO details are entered. 3. Log into your super fund and verify your LISTO payment is landing. Then consolidate any small accounts. And 4. Run the spouse super contribution offset in the spouse details section for checks. About 15 minutes and potentially thousands of dollars back in your pocket and your super over time. If you have made it this far, you now know something most people about to lodge their returns simply do not. Your next step is easy. Open MyGov and run these 4 checks before you hit lodge. It takes about 15 minutes and you can do it tonight. And this is general information only, not tax advice. So check your own situation or have a chat with a registered tax agent. If you want to go deeper, next up, I will show you the deductions most people forget to claim before the end of the financial year. I am Sophie. I will see you there.